Talk shop, baby. We are back. Have you ever wondered what it takes to be amongst the top 1% of anything in the world? Well, today is your lucky day. We have one of the top real estate brokers in America, maybe the whole world. Bob, it's great to have you on the show.
Allon, great to be here. Thanks for having me.
So, Bob Knakal here, former founder and owner of Massey Knakal, sold that, moved on to JLL. He's definitely one of the top players in the world. Bob, we know where you are today. Where did this journey begin?
It began serendipitously, actually. I'll take you back to 1981. I was a freshman at the Wharton School. I wanted to be the next Wall Street guy, like every other Wharton kid, and wanted to get a job that would look good on my resume. So I went around during spring break freshman year, dropping my resume off at every commercial bank and investment bank I saw in Bergen County, New Jersey, which is where I grew up. Came out of a Payne Weber office. Across the hall, I saw Coldwell Banker. I thought the place was another bank. Dropped my resume off. They called me later that afternoon to set up an interview for the following day, which I set up. And again, this was 1981, so there was no internet at the time. So I had to go to the library to look up this bank. And when I saw it was a real estate company, I almost didn't go on the interview. But they were the only ones that were hiring college kids for the summer. Took the job, loved it, went back my next summer, ran the market research group that I had been a member of my first summer. And then my third summer, I got my New Jersey real estate license, worked as an assistant to an industrial broker showing industrial space, and then started with CB in Manhattan when I got out of school in 1984.
So you didn't even know Coldwell Bankers was a real estate office, and you stumbled into the broker world.
Didn't know, completely by accident, and it was the luckiest break that ever happened to me.
I love that. And you graduated from Wharton School of Business?
I did in 1984.
Didn't Trump go to Wharton?
I think he did.
Not even close to the same time?
No, I graduated 84. I'm not sure when Donald graduated, but a lot of real estate folks in New York City graduated from Wharton.
Any big players that you were in school at the same time as them?
Not at the same time that I remember or knew in school, but I'm still very active in the Zell-Lurie Wharton Real Estate Center, and it's remarkable how many New York people that are very active in the business went to school there.
Wow, that's cool. That's awesome.
Yeah, so I showed up my first day at CBRE. At the time, CB had about 50 brokers that were leasing office space, about 20 that were leasing retail stores. There were 4 people in the building sales division, 3 of whom had 20 years of experience, and one was Paul Massey, who had just gotten out of a 1-year training program. The boss said, "Hey, Massey just started in sales. Follow him around. He'll show you where the coffee machine is." And the 3 guys with 20 years of experience weren't spending a lot of time with us. So day 2 on the job, we said, "Look, let's team up, work together, split everything 50-50, see how that goes." And that was the start of a 30-year partnership with Paul.
Wow. What was real estate like back then, back in the day?
Completely different. I mean, there was, from a technology point of view, technology really didn't exist. We didn't even have cell phones at the very beginning. We had no computers on our desks. There was no fax machine. You went to go show a building and you had a roll of quarters in your pocket. And if somebody didn't show up, you walked down to the corner, tried to call them. They wouldn't pick up at their office. So you'd go back, wait another 15 minutes at the building. And if they didn't show, you walked back to the office. It was so much wasted time.
Oh, my God.
But it really was a very, very different type of experience then, but there was a lot of trading. And actually, people think that because technology speeds up the transaction process, that there's more commerce going on now. But actually, there were more buildings sold in the 1980s than in the 1990s, more in the 1990s than in the noughts, and more in the noughts than in the second decade this century. So actually, there have been fewer buildings sold in each of the 4 successive decades, and what technology has done is allowed fewer people to do a lot more.
How is that possible? Today you have the Blackstone, the BlackRock headlines, KKR, all the big dogs buying like massive amounts of properties. And you're telling me back then more properties were selling.
There was more trading. Yep. Decade by decade, the total number of properties sold has been declining. And if you look at in the New York market, for instance, you use Manhattan as a microcosm of that. South of 96th Street, there's 27,649 buildings. On average, over the 38 years, the average turnover of that stock is about 2.6%. So what that means is that that there's never a lot of properties for sale, and that they typically, when an investor buys a property in Manhattan, they typically own it for 40 years before they sell it.
Wow. So who do you target?
Target in terms of buyers or sellers?
Sellers.
So anybody that owns properties within a geographic area, we're always building relationships with people, trying to be there and be top of mind when they're ready to sell. Because because people sell so infrequently, it's important to be there at the right moment. And the best way to do that is by constantly staying on top of them, build relationships with them, send the market information, share what's going on in the market, and hopefully be the person that they think of when they decide it's time to sell the building.
Very cool. Very cool. So is that how you did it? How does a man go from zero to $20 billion in real estate sales?
Well, it's one deal at a time, basically. You get the first one, and then you get the second one. And today, I always say the most important deal is the next deal. So it's just a matter of, I think the real estate business is not magical. It's not rocket science. It's a lot of very basic blocking and tackling. You just have to know who to tackle, how to tackle them, when to tackle them, and just to do basic fundamental things day after day, week after week, month after month, year after year. And, before you know it, 38 years has gone by, and it just kind of aggregates.
Well, you look great.
Oh, thanks.
Crushing it in the game. When I look up your name on Google, the first thing that pops up is your condo for sale? Or you sold it or something?
No, my wife and I are selling our apartment in Manhattan now. That surprisingly to me got a lot of attention in the press.
It's admirable, because it's like so many agents or brokers out there. And to see a man doing $20 billion lifetime sales and selling his $14 million New York City condo, it's like, wow, I can do that one day. So that's admirable. Tip my hat.
Well, I think that's one of the great things about the real estate business is that the sky's the limit. It's a business that is a complete meritocracy. You get out of it what you put into it. And that's something that I always loved about it. I'm very competitive by nature. I played baseball and basketball my whole life growing up, even played baseball in college. And I love the competitive nature of team sports. Real estate, in a lot of ways, is a competitive team sport. And in fact, at our old company, we used to tell our director of HR, look for competitiveness in a candidate's background. Look for team sports, look for captain of the debating team, editor of the school newspaper, something that demonstrated that they had a lot of a competitive spirit within them. And that's a very, very good quality for folks in the real estate business because real estate is a very competitive business also.
It is. I'm ultra competitive, more so to myself, like in my mind and to me, I don't look at other people because it's generational business.
Right.
So it's very tough to compete with the generations. But first I compete with myself, become the best me that I can. And then I look outside and say, where can I dominate, Yep. I'm assuming you're very similar in your own mind.
Yeah, look, I think that, if you read Jim Collins' book, Good to Great, he says that every great company figures out what they can do better than anybody else in the whole world, and focus on that and stick to it. And so I think that's what we all try to do is figure out what we can do really, really well. The best way within the real estate brokerage business, the best way to do that is by specializing in something, because if you specialize, you become an expert, and that expertise differentiates you from everybody else that's trying to do brokerage, and that differentiation creates a competitive advantage. So there's a lot to that. I think you have to be able to not only have a value proposition that's different from everyone else, but be able to articulate what that value proposition is, and that helps you get business.
I love it. Right before we started the podcast, I broke out your book, and one deal stuck out to me. This big portfolio, and you're like, yes, very wealthy man bought it. So you typically work with ultra wealthy people or funds or, whatever, right? Very, very wealthy people are your typical clients. You're in New York City, basically the center of the universe. What is it like working with super rich people all the time?
Well, it's interesting, and I think that's one of the things I love about the business is there are so many different personalities out there and a lot of characters, very vivid characters in the real estate business. And most of what I do is deal with private individuals and families, although we do some institutional work as well. But the dealing with the individuals is really interesting because of the very, very wide array of personalities that you deal with, from very, very wealthy CEOs of big public companies to the proverbial little old lady that owns a couple of buildings. And, we have to treat them the same way, and everyone gets treated according to their personality or what you think will resonate with them. But at the end of the day, you have to do the same great job for everybody, whether the little old lady or the CEO.
Any of these big players ever try and screw you out of commission or anything like that?
Well, that happens occasionally, but that's all part of the business, and you just have to know how to handle it.
Anything that sticks out, like a crazy story that you could go into? You don't need to say names or any of that.
Let's see. I remember one time back in the early 90s, we were selling a property, and the buyer came to us and said, hey, I'd like you to take a lower commission, because you're young and I'm young and we're going to do a lot of business together over the years. And I said to him, why would I take less commission on this deal when you're not even paying me? The seller's paying me. And in all of my transactions, I've always been the exclusive agent for the seller. I wanted to always represent just one side of the transaction, and I picked sellers. But I thought that was so interesting that the buyer thought he could get me to take a lower commission even though he wasn't paying me. So, but you have things come up all the time, and sometimes you need to make an accommodation to get a deal done, or something pops up at the last minute, a sidewalk violation, something that needs to be addressed. And if it's been a very contentious negotiation, sometimes you have to give a little bit to get the parties over the goal line, but you do what you have to do to get the transactions closed.
What was the biggest price reduction you've ever seen while a deal was in contract?
Well, a deal was in contract. Back in 2009, we had a number of deals that were renegotiated that went into contract before the financial crisis occurred, and then were set to close during the heat of the financial crisis. And there were some transactions that, the prices were reduced as much as 12 or 13%. So it can be significant, even if people have big deposits up. If market conditions change so dramatically, you have to be able to adjust.
Is there like a prime example of one deal that comes to your mind?
There is, but I'm not going to say what that deal was.
No, come on, Bob.
Nope, won't go there. But let's just say the buyer attempted a very significant reduction, didn't get it, ended up losing their deposit,
Wow.
which was almost an 8-figure deposit was forfeited on that transaction.
You're kidding me.
Nope.
How much?
$10 million.
A $10 million deposit was gone.
Yep.
Holy shit.
That happens. That's the business.
Those are crazy numbers to just forfeit on a deal. But you're saying that was in '09, so amidst like the crisis.
Right. During the heat of the financial crisis. Don't forget those times were kind of crazy. You had companies that were viewed previously as AAA companies, Lehman Brothers, Bear Stearns, AIG, and all of a sudden the whole market was in turmoil. And, it was a very different set of circumstances when it was time to get to the closing table.
Should they have forfeited that deposit?
In retrospect, no, but at the time, it was understandable.
So political, Bob. So political. You just gave them a win on both sides.
No, look, it worked out for my client who kept the deposit. We subsequently went on and sold the property for him, the investor who forfeited the deposit, he's doing just fine today.
I bet.
Very, very wealthy guy, very successful. And I guess he probably chalked it up to just the cost of doing business.
Gave up a $10 million deposit. That's a big one.
That's a big one.
So the business that we're in is a constant hustle, right? I'm on the investing side. You're on the brokering side. The business you're in is really networking, tons of relationships and hustling all the time. What are the negatives in your eyes? We know the positives, the fruits of your labor, but what are the negatives?
The biggest negative about the brokerage business is that the harder you work and the more you get done, the more work you make for yourself. So it's like you never are done with everything. And that's one of the things you have to, I think the biggest challenge that people have in their lives is trying to come up with the right balance between your job, your personal life, your friends, your family, your faith, your health. And that balance for everybody is different. But in the real estate business, you literally could work 24/7, 365 and not get everything done. And there are oftentimes like a couple of months or a couple of weekends out of the month, I will pretty much work the whole weekend. And I find that on Sunday night when I've worked the whole weekend, I feel really great because I got so much done. But then because I got so much done on the weekend, Monday morning is an avalanche of new stuff that I have to deal with. So as I said, it's like the more you do, the more work you make for yourself. And so finding the right balance of figuring out what are your priorities, what you want to do, what you need to focus on, those are all very, very important because you literally could be working around the clock. And as I said, the more you get done, the more you have to do.
Is that why you sold Massey Knakal?
No. We sold Massey Knakal for a couple of reasons. One, when we started the business, we built the business with the intention of selling it one day.
Okay. Mind you, I'm that was before my generation.
Yeah, no. I get it. We started the business. We always said, look, let's do everything we can to make this business as valuable as possible, and it would be cool to sell it one day. We almost sold the company in 2007, and for a variety of reasons, we didn't. But it became very clear to us in 2007 that if and when we did sell the company, we would be on 5-year contracts with whoever the buyer was. So at that time, we said, well, gee, in 2015, Paul, who's 2 years older than me, will be turning 55. Our thought was that the perception of the value of our contracts would be better if we were on those 5-year contracts when we were in our 50s as opposed to in our 60s. So we said, all right, in 2014, if the market isn't in the tank, we should look at selling the business at that time. And so, we didn't sell in 2007, although we had a very good offer. We had a $50 million offer from one of the big global firms. Didn't sell. 2009, the market was horrible. We wished we had sold, but made it through 2009. By 2014, the market was really doing great. Actually, just again, luckily, In 2014, there were more buildings sold in New York City than ever before in history. 5,534 buildings were sold in that year.
It was actually your top grossing year.
It was definitely my top grossing year.
And coincidentally, you sold the company in your top grossing year.
Right, right. And again, just all of the stars just lined up. It was a perfect time to do it. And we were very lucky. But, we built the business with the intention of selling it. And just in retrospect, we sold at a perfect time. All by luck, not by design, other than the fact in '07, we said, if the market's not really bad in 14, that will be an opportune time to sell. And at the time we sold, we had 250 employees. And mind you, it started Paul, myself, and a secretary in an 800 square foot office. And we grew it to 250 people in 4 offices in New York. We had, for 14 years in a row, had sold more buildings in New York than any of the other firms, the big nationals, the globals. By a factor of 3.
Wow.
And it was a great thing. And I think part of the reason why the company was so successful was that we had a very disciplined system. It was also a time where technology did not create the transparency that it creates today. So a lot of our internal databases were created by sweat equity. And people focusing on one neighborhood, digging in, getting that neighborhood under their fingernails. And that took a lot of work back in those days. Today, you go online, and there are a number of places you can go find all the information that we had to work so hard to get manually that you can just go on and get easily today. So I think if we started the company today on the same basis and the same platform that we started it on in 1988, there's no way it would be as successful as it was then.
Did you sell it for less than $15 million?
No, we sold the business for $100 million.
Wow.
The bid we had in '07 was 50.
Oh, 50.
Right. And we ended up selling it for 100. Right.
You doubled it, but you also did fantastic every year, commission time over time.
Well, not every year. Some years, '09 was a tough year, and there are times when, in investment sales, revenue fluctuates with market activity very significantly, is very highly correlated. So when volume is going down, commission revenue goes down. When volume is going up, commission revenue goes up. So
what are you seeing right now?
Right now, volume is on track to be up in 2022 from 2021, but the dollar volume of sales is on pace to be up about 28% over last year. Number of properties sold is on pace to be up about 12%. However, the Fed policy in raising interest rates really took effect about 2 months ago, and so I think fourth quarter numbers are going to be down very significantly. And so I think that the market will not be up. It could be relatively flat compared with where we were in 2021. The 2021 was up a decent amount from where we were in 2020, which was the low point of the market. To give you a sense in looking at transactions and using Manhattan as a microcosm, Manhattan investment sales volume over $10 million was about $11.1 billion, which was a cyclical low. Got up to about $15 billion in 2021, and we're on pace to be about 21. But it's not going to end the year on that pace because the fourth quarter numbers are going to be down.
I see. And you're expecting them to stay low through 2023?
I think at least for the first 2 quarters of 23, because don't forget, in investment sales, the deal process takes about 9 to 12 months start to finish. So the fact that people are nervous today and are not actively signing as many contracts as they were a year ago, that's going to lead to reduced sales volume in the fourth quarter and the first 2 quarters of next year. We have to see what happens with interest rate policy. It looks like interest rates are going to continue to go up probably through the first quarter of next year. So if that's the case, sales volume could be down. But the thing we always have to remember is that capital, and and the movement of capital really impacts how the market performs. Capital tends to move with a herd mentality, and so capital right now is fearful. And markets, the way markets perform, it's always a fight between fear and greed. Today, fear is winning. And it always goes back and forth. And there is a time greed will be winning again. And when capital decides to get back into the game, it's going to come back in a very robust way. If you think about the massive amount of capital that's out there, private equity firms held about $2 billion in 1994. Today, they hold $300 billion.
Wow.
So when that capital comes back into the market, it's going to come back in a big way and go crazy. And I'm sure the market is going to be great again.
Are you preparing for that?
Absolutely. Always preparing by getting our research up to snuff, by creating new weapons to go into battle with, which in our market, weapons are resources, information, data, marketing materials, things to go out and be successful when that next wave happens. And it's just a matter of time. I don't know when it will be exactly, but I know it will come back. And when it comes back, it's going to come roaring back.
How many people do you have today?
In our private capital group at JLL, we have about 21 people.
Okay.
We are very active in the New York City market.
You obviously focused in New York City.
Yes.
You never stemmed out?
No, during the last few years, particularly in the multifamily sector, when the rent laws changed in June of 2019, it hurt the market significantly. And a lot of my clients who for decades only bought New York City multi were investing all over the country. A lot of brokers that I know at other firms were all of a sudden going to Texas and Florida to do transactions. I didn't do that. I stayed in the city. Maybe that was a good decision. Maybe that was a bad decision, but that was the decision I made. And I'm completely New York City focused.
Speaks volumes to why you're the most successful commercial broker in New York City. And it sounds like you know every single building that the city has.
Well, I don't know if I know every single building, but we try to, look at the market very, very analytically. I have a great team of folks that I work with, and we're constantly trying to improve our knowledge. We say in the brokerage business, you have two main resources, our knowledge and our time. Can't get any more time. You have to try to use time as effectively as you possibly can. And if you use it efficiently, you're almost like creating time, but there's always an opportunity to get more knowledge. And the more knowledge you are, the better advocate you can be for your client, the better advisor you can be to your client. And that's what we try to do, is help our clients make the best decisions possible. What's
the most creative deal you've ever seen done?
Most creative, well, there are a lot of them. I've been fortunate enough to be involved in several transactions that were nominated for the Real Estate Board of New York's most ingenious deal of the year. Several of those have been land assemblages. There's one transaction that we did over in the Diamond District on 47th Street. That was a very, very complicated transaction because we found out that there was an employee working for the owner who was taking all the offers off the fax machine and letting one of the buyers who was interested in buying the property know what all the bids were.
Wow.
So there are always wild things that happen in our business. But, thinking outside the box and thinking creatively, looking for creative solutions is a great way to get things done.
You know what? I'll loop back on that question. 40 years in the business, right? You've seen it all in New York. What do you think the best deal you've ever sold was?
The best deal I've ever sold. I don't know what the best deal I've ever sold was, but I'll tell you what I think was one of the best deals ever made. And that was in the early 90s. There was a portfolio of properties that a bank was foreclosing on. Don't forget, during the S&L crisis was another time that was very, very tumultuous in the business.
What's S&L?
the savings and loan crisis.
Oh, yes.
And during that time, a lot of people, very few people had money. If they had it, they were afraid to spend it. Properties were going at very, very significant discounts. And there was a portfolio of properties that a bank had foreclosed on. It was called the New Rock portfolio. Was purchased by Andy Davidoff at Emmis. And I think he's done something like returned 40 times the equity investment to his investors over time. That was I think, well over 100 properties in that portfolio, and I think Andy still owns a few of those. But it's been unbelievably successful. And, if you look back, like people today are nervous about what's going on. Value is having negative pressure exerted on it today in the city. People are fearful. Interest rates are going up. And I tell people that if you look at investors who have invested over a long term and ask them when the best deals were that they ever bought, they'll tell you they were at times when the market was really, really bad. In the early 90s, during the savings and loan crisis, in 2001 after 9/11 and the dot-com bubble bursting, in 2009 and 2010, great financial crisis. And I think we're entering another time when people are going to make deals that they'll look back on 20 years from now and say, wow, that was one of the best deals we ever made. You have to have two things, though, to do it. You have to have, number one, the capital to do it. And number two, you have to have the guts to go and make these big bets today when everybody is really scared. But these are the times when people will make the best deals of their career.
Did you guys hear that? This is our time. Spoken from a man that's seen all the cycles.
If you're an investor, I'll tell you, we're seeing it. Values are coming down. A lot of people are going to be forced to sell. If you think about what's happened with the very unprecedentedly quick increase we've had in interest rates, it's been the fastest rate increase we've ever seen. And I really believe that the Fed has misdiagnosed the problem. And I'll explain that as, if you go back to 2019 and you say, all right, by the end of 2022, where is employment going to be relative to where it is today? I think you would have projected that there would be 3 or 4 million new jobs added. We've added 800,000 jobs. So the Fed has been saying, well, we're going to keep raising rates until employment, cools down a little bit. I don't think employment is overheated. It's not like we added 6 million jobs. We added 800,000 jobs. I think that the reason the employment market is tight is because we're undersupplied. And because of that, the Fed thinks that the economy has a disease that it doesn't have. It's like if you went to the doctor and you have disease A, and the doctor diagnoses you with disease B and is going to aggressively treat you with a big medication program for disease B that you don't have, it creates issues. And I think that's what's happening today.
Unfortunately.
Yeah, unfortunately. So there's going to be this tremendous downward pressure on value. And what we're seeing is that people who have mortgages maturing are going to have to put fresh equity in to effectuate refinancings. So if you have to put that fresh capital in, number one, do you have the capital? And if you have it, do you want to put it into that particular property? If you don't have the capital, how do you get the capital?
And if you don't want to do it, you call Bob Knakal.
That's it. No, some people may have to sell. Exactly. People may have to sell, or somebody looks at their portfolio and says, hey, I have 15 buildings. Some are A's, some are B's, some are C's. I really want to hold on to the A's, so I'm going to sell the C's to get the capital so I could do the cash in refi to hold on to the A's that I want to hold on to. So I think there's a situation here where the fact that some people will be forced to sell will exert even further downward pressure on value. So
are there any asset classes that you see in particular?
Well, I think every asset class kind of operates a little differently. We're seeing the multifamily market has been very interesting in that, it took a hit when the guidelines changed in June of 19. Took another hit during COVID. But now what's happened is with the sharp rise in interest rates, it has basically made buying a home unaffordable for a lot of people. So those folks have to live somewhere, so they're renting. So consequently, we've seen significant increases in rent levels. So rents have risen. That's helped multifamily values. Although the sharp rise in interest rates is impacting what an investor could pay for the property because of the amount of debt service they have. But that market is very interesting in the way it's operating. If you look at the land market, which we sell a lot of land in the city, we've seen construction loan pricing go way up. That's impacting what people can pay for land. In the office sector, the work from home experiment still is with us. And so what aggregate demand for office space is going to be moving forward is still a little unclear. That's impacting the value of office buildings. With people not getting back to work, that's impacting the retail space that's at the base of these office buildings and in prime Midtown South, and downtown.
Oh, I have a deal in Midtown. Got to talk to you about that.
Okay, love to talk to you about it.
Yep, I definitely have to talk to you about this. We can't forget.
Okay, but every product type is operating a little bit differently, but they all are being impacted by what's going on today.
Fascinating. I can't wait to see what happens. More so eager than anything else.
Yeah, well, these are the times when fortunes are made and lost. I think that for a smart investor who, again, has capital and guts, there are great acquisitions to make. And it's going to be a time when existing property owners are going to have to be very, very creative about the way they hold on to what they want to hold on to.
I see. Well, Bob, before we wrap this up, I want you to leave us with one last piece of knowledge. If you were to start over again with everything you have, 40 years of experience, $20 billion in lifetime sales, where would you start?
You know what? For me personally, I love being a broker. I occasionally get asked, if you weren't a real estate broker, what else would you do? What would your job be? And I never have given an answer because I truly don't know what I would do other than be a broker. I think that, when we formed Massey Knakal, we did it on a geographic orientation. And that was something that was a differentiator for us. I think if I had to go back and start over and do it again, I would have product specialists layered within a geographic matrix, because I think product specialization is very, very important. Because we all have such limited time, as a broker, you want to have everything that you're doing all day long be accretive towards getting the next deal. And if you're selling a retail property, an office building, and a multifamily building, and you sell those three, and then you're going to pitch another multifamily building to sell, only one of those three transactions is helping you get the next one. The seller of that multifamily building doesn't care about the office building you sold or the retail building you sold. So I think that focusing on one particular thing is very, very valuable, because then every single transaction you work on puts you in a better position to get the next one. So I think the product specialization with a geographic framework would be a better system than the one that we implemented. Again, I wouldn't go back and change anything we did because I'm very happy with the way that turned out. But I think that a combination of the product specialty and the geographic specialty makes for a very, very powerful skill set.
Well said, Bob. That was awesome. So happy you came out. Thank you so much. This was great.
Allon, great to have been here with you.